Good afternoon or good evening. Welcome to the end of day review for today. And today is Monday 25th, 2024. So this week we are Thanksgiving week. So we only have 14 trading day. The markets close on Thursday right there. So and on Wednesday we wait for the GDP data come out and spoke for the PCE data. Right, they say the PCE data released on the 27. So okay. So both of them is come out on 27. Yeah, they're both 27. It used to be 27, 28, but now it's 27 because Thursday is holiday. So now we see makes sense now. So both you have a PC data and the GDP data. This one is not updated yet, but the government side is update. Right? It used to be 28, 27, 28, but now 27, 27. No big deal. All right, let's see what is. Today the price action is quite interesting, especially before overnight, right? Overnight and pre-market is it rally. It create a very big void gap. All right, let's see. Here's what we see. Let's look rewind the tips. So we can see right there. So at 9:30, right? 9:30 we have this. What do you think? You had a big void gap right here on Sunday, and then the whole thing right here, London, it's a consolidation, and then you have a huge swing. We can call this a 9:30. No, prior 9:30 euro swing right there. But the funny thing that the 9:15 is not continuous swing. It already It's already retracement. So a little bit different than the other day. We have a euro swing prior to 9:30. I think we did have that. Let's take a look at the screenshot we have for this scenario, or for the scenario that the euro swing prior to 9:30. All right, here's the scenario where we have the euro swing at not at 9:30, but prior to 9:30. You see the euro swing right there, and reversal at 9:30. 9:30 is reversed right away, and you see all the note we make right there. So basically the open 18 hour is down close, and then you see the Asian is expansion down right there, and then you see a retracement, and then you see London also expansion down, and right after London and the pre-market on a New York expansion very fast and furious right there, and the 8:30 also upswing, but the 9:15 is touched from below right there. So that is the euro swing prior to 9:30. And look at this. This is completely different. You see it break away from the previous day. The PM right there, New York PM, it break away, and then it's just consolidates the whole thing, and then it's expansion, and then the 9:15 start retracement, and then the 9:30, right? It looked like it gonna continue that trend. You see that. Yeah, let's increase the speed a little bit. So right here, Still 9:30, so it not even finished the first minute. So what do you think? What do you think right here with her? All right. So you have what? You have expansion, right? Consolidation right here, expansion. That day here gonna be retracement. Okay. So it's gonna be retracement or gonna be reversal. Let's see how it's play out. Yeah, right. It pretty much first minute right there in our mind that it's gonna be a expansion and then retracement or reversal right there. Just the first 1 minute. Let's see what is yeah, that's the screenshot we take also at the beginning of the day right here. And yeah, that's how we look at the beginning of the day at 9:32. We see that is it the high time frame, the daily time frame. You see the huge void gap right there, and look at that candle. So it looks very bullish right there, but if we know the liquidity that at when we have a Judah swing prior to 9:30 and it take out both the prior day high or prior day PM and the London, then on we look for a retracement reversal right here. The only look for at least at 9:30 you're gonna see a retracement. Yeah, that's what we're thinking. We did go short right here, and let's see what happened then. Yes, so just 1 minute. Start, and you're gonna see, yeah, in the second minute, you see what happened. A start flip right there. 90. You see that? That flip right there. And then we're thinking to ourselves, wow, it really gonna be retracement, just one kind of retracement, and then it gonna expansion again. That's what we are thinking, and I think we did go. Yeah, we did go in and go long, right? We switch from short to long. Yeah, it looked like another reason is that we have the high time frame. We have the high time frame right here. We see the level up here. The 60-40. We thought that it gonna hit that level with the momentum when it flip in 9:30. We thought it gonna read that, right? It's very close. So liquidity pool right there. And let's see if it read that liquidity. So 6 minutes, 7 minutes, not hit that liquidity yet. Wow. So what do we think? You think you're gonna hit? Yeah, it's just 8 into minutes, so it still have time. And we think, and we took a trade right here with Chase right here. That is a blunder for right there. All right. If you want, you trade out here. When you go long right here, you Chase right here. It may not reach the level, or may not 50%. But the risk reward ratio right here is not good. So not only you have a win rate, but you need a risk reward ratio. And the risk reward ratio is based on the location. So now it with hand side help us to make a better decision. At that moment, in the heat of the moment, we took this way. We go along right here because we anticipate gonna hit this, so we just aim for quick profit right there. But that is really messed up. We make a mistake right there. It did not reach that level, and it retraced. As soon we go long, it just go again. Yes, you see that? Yeah, it looked like that, but it did not hit that level. And you see, we thought, wow, we still have 5 minutes. We can wait for it to hit target, but we keep waiting and waiting. It did not have hit our target. You see that? It's almost, look at that. It looks so attractive. It looked like it's gonna hit. You see 38.75 right there. It's just 2 pawn. 2 pawn, which is 4 pip, right? 1 pawn is, if it was 8 pip right there. 8 ticks right there, but it did not. Oh yeah, we chase again. Yes, we did chase that. Let's take the trade we took. All right, here's the trade we took. The very first trade, we go test the water. So yeah, we're going just right at 9:30. We see that, so we go very easy. Right, just one count to test the water. And yeah, look at that. And then boom, it flipped on it right there. I think we should move to break even, but we doesn't care, right? It's just one contract, so we just play with that, so we don't have to worry. But boom, it flipped. And from here, you see that we switch to long. Perfect, we switch to long right there. We take one contract, and boom, it really go up high right there, and then it come back, and then right there we go in with 10 contract, and the 40, that's where the high time frame level that we anticipate you're gonna hit. If you look, see that 40 right there. Yeah, that's the 60-40. Let's see if hit well, 45. Okay, let's see. Yeah, but we good. We take the profit right away. As soon as we see profit, we take. Did we? No, we didn't take it. Oh, we take it and then we go in again. Because we see the retracement, we go in again. And let's see. Wow, we go in again and boom. You see that? We make mistake. It's okay, but don't go in at this level. We go in at this level, that's okay, but we go in again because we greedy. We thought it's gonna be explosive. Yeah, that's which we'll go in again second time and boom. That's okay. That's okay. But that's this our lesson that the 9:30 it very fluctuate, especially you already see that it's a huge gap up right there. So better looking for the 9:30 one single swing and then it's reversal. Just keep in mind we saw that phenomenal before. Let's take a look in the past. Here's the pretty much the same scenario. Detail maybe a little different, but the idea that at 9:30 it's only one single swing and then it reverses. You see that? This happened on November 12th, which is on Tuesday. You see that it did have the Euro swing prior to 9:30 and the 9:30. Oh yeah, 9:30 also flipped. We believe so. It flipped. Right, it come down first. You see that flip. So the action of the 9:30 is pretty much like today. It down and then it flip. I saw it rate on the London and the previous day PM. Then boom, it's just reversal. Yeah, this is the heel rate driven right there. So the reversal is more likely in this case. In this case, more likely. So We take right here because we are formal, or because we're not aware of the context, right? Because you see the gap up and the huge run right here. So this is the trap. This is the trap to short them. Instead of going short, we go long on the last minute. That's the no right there. That's the lesson we learned. Okay, let's see what happened next. Okay, perfect. So right here, as soon as we see this scenario, we know that it's gonna they're gonna flip from here. Then we see that we go in, we short very aggressively right there. We short at the candle up close right there. That means we know that we know the short is gonna come in, and we go in the big side right there. Perfect. You know what? If we let this trade run, we make the huge money. If you look at the right here, I think, see that, and let it run. You see that we make huge money. Let it run. Or you go to the chart, you can see for that. You see that we short right there. It's at 9:45. Oh man, we should let it run. Then we have a huge run. See that, man, 50 point. 10R. Wow, that's 10R right there. So we go in at the 60 35 up here. Wow, and we let it run just high time frame level right here. You have 45 divided by 5, 9R right there, my friend. Yeah, we I mean, at that moment, we haven't thought. We just get in our computer and open the chart and saw it and go in swing. We are completely void of the awareness of the situation, the context we are in. So that is what preoccupies us, and we don't see this move. And we're so caught up with, oh, I need to take profits. You know, we're thinking about the profits and lost too much. We lost the context. We lost as the direction. The draw on liquidity. That's the huge lesson. We have a perfect entry right here. We should let it run. You see that huge right here, test from above. The huge source coming, and also look at this. Come on, it's the huge void gap right here. It's gonna feel red gap. Just relax. It take off here, and then that the winner run. Yeah, that's the huge lesson right there. And look, I think we take a quick profit right there, and then let's see what happened. You see that we move. Come on. Okay. Okay, so right here we add contract more right here, and because we know we're gonna hit this level. Yeah, I hit our target. Right. Let's see. Yeah, it will let it run. It will make huge money. We just try to take again. We do the same thing we do up here. We want to take quick profits. That's our mindset at that moment right there. Yeah, so that's our mindset right there. That's fine if you done, you follow us right, so it's fine. But let's see, I think we make errors from here. Instead, let it run to another 9R. We make mistake. Okay, so right here what did we do? All right, so right here we saw that it's gonna break down, so we go in, we go short right here again. We chase them. You see that? We take a very low rate there, and look, that's where a mistake made. Yeah, that's all thing messed up right here when we chase. Yeah, we need to take this this screenshot, because this is where everything is start falling apart right here. And we learn lesson. You should not let one trade, one mistake really rattle us or bother right there. We somehow we have to manage to remain unbothered, or not impact negatively for the whole day right there. That's where it really rattles us, and we make a bunch of other mistake or blunder after this mistake. So somehow as a trader we need to reset our mind. Every trade you have to reset it. Don't let the prior trade, the outcome of prior trade is impact us. Yeah, I think we take your screenshot so we know that this is where we make mistake. So we make mistake at the 10:01. Wow, is that 10:01? Okay. Yeah, that's where we make mistake. But let me see when 10:01. Is that right? Oh, 10:11. No. Eventually it hit that level. You see that? Look. Yeah. Okay. 10:02. Yeah. So at 10 right there. That's it happened fast and it reversed back. 10:01 right there. Yes, that's the mistake we make. So yeah, you see, so we see that we try to aim at this. It hit, it will. But the trick is that it moved very fast at the first minute and then it retraced, and we put our stop loss too tight because we go in with a big size, so we are expect it will follow through. So that's the trick right there. You know, when you go to the big through, you cannot afford the giving back. So that's the danger right there. Well, if you decide to go to the big side, then you have to decide also to willing sit through the fluctuate, which is give back a big gain, and you have to know where is your stop loss. You don't want to simply go here and put stop loss here. You have to put at least above here. So that's the huge lesson we learned today. And you see that it rattled us the whole thing right there, because we get nervous that we're gonna give back the whole the whole win we get so far in the morning. You see that it's almost there. So we entry too late. Too low. Too early. We entry jump too early and too low. Right? Wait for retracement or whatever. That the huge errors, and right here it get us so nervous. So yes, you see that, I think, and it rattled us from there. We I think we closed the trade because it retraced. But if we know that this is gonna be a not Euro swing, yeah, Euro prefer 9:30, and this is a one single swing at 9:30 gonna reverse, because the huge down right here, huge void right here. Right? For some reason, in that moment, we know of this, but we just keep look at that number. We cannot afford to give back. We cannot lose too much, and that is where we take our attention off what happening right here instead of the internal. You see that? We close the trade. Yeah. You see that? That's the second mistake we make. Right? The first mistake we make is we chase when it's down here, and the second mistake we make is when we decide to close the trade. The reason why we close the trade because we look at the red number we have to give back. So it's, oh no, I don't want to give back, so we close the trade. That's the second mistake. But if we understand the liquidity, draw on liquidity, we know, then we stay in the trade. Put a stop loss up here and let the trade play out. We still have a huge run. Yes, that's the second mistake we make. So we did take the note, right? That's the first mistake we make when we chase down here. And the second mistake is when we are, let's go back there and take screenshot up here. The second mistake we make is when we close the trade at what time? Let's see. We need to pause right here and see. We close the trade. We want to take the screenshot. Yeah, let the patient wait here. See when we exit the trade. That is the second blunder we make. We close the trade, but I want to pause exactly when the moment we close the trade, so we take screenshots. Yes, so right there, we put our amount right there, close the trade. Okay, let's take screenshot. So basically, the first mistake that we go in at 10, we chase them, and then the second mistake is the 10:04, only 4 minutes. How we exit the trade. All right, two beautiful mistakes. You see that? And now when it flipped right here, we said go long. Can you believe that? We thought, oh, maybe this is just retracement and this is retracement end. So we go long. All right, let's see. Boom, it stopped at our right there. You see that? Boom. That's boom. Yes, and now we go into the loss, and that's where things start to go south, because after a huge beautiful win, we give them all back, and that's where things start getting desperate right there. We desperate. We try to get back our our gain, and that's where a bunch of mistakes start making. And right here, you see that? You see how impatient we now? We're just jumping with the big side right away. Right now, I mean, not right now, but at this moment, we no longer trade. We just try to get back the loss. Yes, that's exactly what happened. Mentally, we just panic. Yeah, mentally we're no longer reading what the market tells us to trade. We're not reading that. Our eternal conversation in our mind is, oh no, I have to get back. Basically, we force ourselves. Now it's no longer we trade the market. We follow what the setup gives to us. No, it's just we just chase them, try to get back, get back the money we lost. That's exactly what happened at this moment. The decision making is no longer based on the prior action, but it's just based on the emotional inside of our hand. Yeah, that's that it is. I mean, it's beautiful that we We rewatch that moment, we review so we can reverse engineer our emotion, our thought at that moment. How do we make that decision? And it process, right? The more we do this, the more we fully understand how we make our decision in the real time, in a heated moment. So we avoid the pitfall, we avoid the shortcoming, we try to improve ourselves. We can remain calm regardless the outcome of the trade, regardless how much we lost. All right, because we let the outcome of the trade impact our decision making. That should not the case, right? Win or loss, we have to follow our plan and remain calm. But right here, we chase him right here. Definitely we chase right there. And boom, yeah. What happened? All right, we go long and then is what 18, okay, and then it retrace back and I think we get out or something. Yeah, you see that? Yeah, I mean, look at that. That is a very desperate trade. If you decide to go along with that, then stop loss have to be below this level because this still test from above. If you break it, I mean, come on. See that? Let's see. Did we decide to go along? Yeah, so basically we decide to go along on this guy. We thought okay, it's retracement and then boom, but it did not happen that way. You see that? Yeah, we're very desperate right now, and now it's more desperate. Okay, so I saw something right here. Is that we going again? So we see that it's very frustrating, right? It come back and it stop it out and then it go to the original direction, okay, and they come back again, boom, right here. What really happened? Well, let's see what happened right here. Remember, we have a beautiful entry right there. We should let it run, and now we have to go through all this miserable. Now we have to chase to get it back. We are in the position like we dig ourselves a big hole right there, and we keep digging instead of stop digging. Let's see, we do, yeah, okay, we decide to what? We thought they're going to reverse, so we decided to go in and go long. Yeah, you see that? We go long, but when we go in, it stops out right away. That's also a very mistake upon right there. You go in with one contract, you don't jump into 10 because it flipped back right away. So we lose right away. Oh, now I see now. And we get mad, we jumping and go long again. And now we say, wow, we're gonna hit that. That you see that mistake after mistake, because like we say right now, we no longer trade. At that moment, we no longer trade. We just try to chase to get the money back. We no longer read the price, and basically the emotion is really drive our decision. We lose our rationale already. So it's just completely FOMO, from then on. But it's okay. We review so we can learn. We see what area that we need to working on. We need to give room to ourselves to make errors, to grow, forgive ourselves, and learn and move on. We cannot just we cannot just dwell in the mistake we make. We should not. We should forgive ourselves when we mistake and move on. You see that the minute you go along, it start retracement, and they're gonna flip from here. Right? Okay, it going. So okay, it flip back. We should take profit right here, my friend. We should take profit right here if we follow the previous principle, right? We want, as soon as profit I take and let the winner run. You should apply the same principle right here. The reason why we don't do that because we lost. We just look at the big number. We say, oh no, we need to get back. That means exactly what we no longer trade what's happening in the market. We try to get back the money. That is a big no-no. Right here we should take the profit. We did not take profit. Basically we wanted to go up here so we can get our money back. That is what we want. We no longer trade what's happening in the market. We trade what we want it to be happen. Right? We no longer trade what is happening right now in front of our eye. We want it to be happen. Our internal conversation is there. We're going to get back our money, and boom, you see the mistake. We should get right here 2,000 something. That's big enough right there. Cut off half of a loss right there and let the last winner run. But you know what? We don't see that anymore. Now we're just driven by the madness that, I need to get my money back. The run is no longer there. We just fall ourselves in the market. The market tells us different story, but the emotion is cloud our loss. You see that? Come back, it take us out. You see that? We don't even move to break even. You see that? That's how we make the decision in that moment. I mean, there's no way to explain this phenomenon than the emotion that try to get back the money. You should take profit right there. The idea that we see that test, break, and reverse, we thought that it's gonna be reversed from here. But you remember a huge magnet down here is the void gap right here, it's gonna come down. And if we know that here the Euro swing from 930 and 930 is just another one single swing, it's gonna reversal. With that in mind, then we if we go long, we have to take profit right away, and short is better. So that's right there. We see that, right? And now we get mad at ourselves that we didn't take profit right here, and now we completely lost our cool. We completely lost our composure. We really mad at ourselves, and we really mad at the market. You see that? And what happened right here? Okay. And here's the trick right here, all right? So beautifully, we go short right here. And the reason why you see that is test, breaks, that formula, and reverse. Perfect, right? If you let this trade run at 60-55, 60-15, 60-15, right? 16-15, we go right here, 16-15. Yeah, it's still up here. 15 right here. Down here. Yeah, it will let it run at 15. Look, we can recover all of our loss right there. 5R, come on, we can all our loss right there if we just stop right there. Yeah, let's take this screenshot. So basically we make three major mistakes, right? The first mistake that when we go in, we go short right here. No, we short right here, we should stay in that trade at 9:45, all right? And then when we go right here, we short at 10. We put the stop loss too tight, and we exit early at 10:04. That's the second mistake. And the third mistake we make is just right here. When we go in at 10:47, we should let it run because it's gonna make a second leg down. And we completely mixed right here. We thought, okay, it's gonna be a test break, reverse that right, but somehow you see that when it retraced. Okay, so what happened right here? Oh, did we decide to go long? Come on, man. Okay, let's see. We short, okay, 49. Just 40, we're going 7, right? Just 48, so 1 minute later. One minute later, we decide to close the long trade, short trade, and turn to a long trade. That is another mistake. Yeah, let's see how we manage right here. Just be patient. I want to see when did we exit and turn into that the fourth mistake we make. Let's see where we at what minute. Okay, so 47 to 53 minutes into the trade. Yes, so we decide to close at 50. We decide to close the short trade instead of increase the size. We thought, wow, it's gonna retrace, but it not. You have to look at the so-called neck leg down. We did see that. Let me see where we put. Okay, so right here. This is. We look back, you see that it's a second leg down at this level, 60.59 right there. So basically, you have break it and reverse right away and test from above, then boom, you're gonna have a huge second leg down. So it's a real breakout right there, and we missed that. We misread the markets, and that's the reason why we have to understand how the set of formulation. Otherwise, we just trade candle by candle. We get very fluctuates. We exit right here. Yeah, basically we early exit at 10. You see that? At 10:50 we exit out, and then we go in with a long trade. That's long trade, and then things start go south, and boom, it stopped out right there. You see that? That's mistake. And now we go in and short this one. We aim at this level because we know that it's gonna be come down to this, but we don't have a patient. See that right here, we become, we don't know, we become, like I said before, our mentor is really, you see that, which is close position. Yes, that's it. The fourth mistake we make. We should stay in the trade when we short at 11 right there. You see the candle 11? 11. So where is 11? Yes. It come back, but just stay in that trade and put what our entry. So we entry at 13. Wow, 13. It's 13, right? Did this come back 13? Yeah, 55. So it may stop it out. But let's see how we handle right here. Yeah, so it's a quick profit right there. But now we go long. Oh, come on. Because it does look like it reversed from here, but we just changed my friend. We make a mistake. Really, should not go long right here. Boom, it go back and we short. Okay, is that at 10, 10, 11, 10. But it switched back and we should go long again. And perfect right here. Oh, we thought that it's gonna reverse from here. You see that? Break step from above and reverse, but it did not. It's very weak right there. As soon as it should break, we have to stop out, my friend. Yeah, so we must put a mistake right there. That's what the other trade, other mistake we make, so we can learn. So yeah, continue that right there, and I short them. Yeah, right here. Okay, so look right there. We go in at 10:37, which is the candle at 10:30. Oh, sorry, 11:30, right? 11:30 right here. That's the mistake. Should let it run. It will hit this level. So we go in 606 down here. Yes, it's right here. Let it run right in the level. We still have 3R right there. Yes, that's another mistake we make. You should let it run. Yeah, the fifth mistake that we are exit the trade too early before it hit the target 59, 90, 25 right there. Yeah, we did take for. Yeah, we should let it run. It will hit the target. You see that? It hit right there. Yes. And now we go long. Let's see. No, stop out. And right here we go long. That's a perfect trade. You see that? And we aim too high, my friend. We should take profit right here. See that? We aim too high. Eventually it will hit, but it have a retracement. We should take X. We should get out of here. You see that? And take a 1,000 loss for the day should be good enough. It even go up to right here 700,000. So we lost 1,500 should be good for right there. So this is another mistake we need to make right here. We need to exit the trade because we lost. The reason why we try to stay in the trade longer than we're supposed to be. So this is the sixth mistake we make right here. Yeah, so we should take the profit right here. That's our fifth mistake. We didn't take it. See that? Didn't take it. And let's see what the next video we take. And then see that when it come back, Okay, we did take profits right there. So we take profits. So we cut our loss right there, out of 5,000. And then I think we short here. Yeah. Short again. Here's we go long. We thought we're gonna hit that level, but it did not. And we make a big mistake right here. We short them, and it come back against us, and then we go long. And basically, it's just move back and forth that level, and eventually it go a little bit into our direction right there. So the only good trade is that after this retracement, you get expansion. So the lesson we learned right there is in Monday, right? On Monday, if we see the big move happen in the AM, the gap being filled or whatever, then don't trade in the PM. The PM is just very high resistance liquidity run, or it's just consolidation. Waste our time and energy right there. So just keep that in mind. On Monday, if the big move or big target already hit, in this case the time the gap already filled and high level hit, then don't trade in the PM. It's just waste of time. All right, we run out of time. We thank you for your time and interest. We're always grateful for these opportunities, and we do what we love. Then success is coming our way day by day, and little by little we're getting better and better. Have a great night, and see you tomorrow.